One company on the docket today, Star Mika, ticker 2975. Real estate player out with a semi-annual report that's got a lot going on.
Yeah, this one's a mixed bag. Record numbers on one hand, a market turning south on the other, and a big capital alliance sandwiched in between.
Let's start with the headline. Interim results are apparently record-breaking?
Across the board, net sales up 29% to 43.4 billion yen, operating profit up nearly 70% to 6.8 billion, net income up 79% to 4.36 billion. The renovation mansion segment drove a lot of it, but the investment business revenue actually tripled, and advisory more than doubled.
That's explosive growth for a real estate company right now. Because the Tokyo secondary condo market is clearly softening, right?
Exactly, and they disclosed it transparently. Transaction volume down 3.4% for the second straight month, price per square meter down 3.9% for the first time in 73 months. Inventory ticking up 3.4%. So they're printing record numbers into a market that's rolling over.
Which makes the balance sheet expansion pretty aggressive. They're loading up on inventory just as prices soften.
Real estate for sale jumped from 105 billion to 123 billion yen. Long-term borrowings up nearly 15 billion. Equity ratio actually fell to 24.7% despite the new capital raise. They're leaning in hard.
And that capital raise is the Tokyo Tadamono Alliance. 11% dilution, right?
Correct. 3.8 million new shares via third-party allotment, about 6.6 billion yen. The partnership covers high-end renovations using Tadamono's Brilia brand, joint whole building investments, urban redevelopment, plus sharing customer networks and procurement.
So they're betting that pairing Tadamono's brand and pipeline with their renovation expertise can offset the market headwinds.
That's the thesis. And management's confidence showed. They bumped the midterm plan targets. Sales from 84.7 to 89.1 billion, operating profit from 9.2 to 10.4, net income from 5 to 6 billion.
Dividends up too?
Interim dividend forecast raised to 25.5 yen from 15. Year-end at 22. Targeting a 40% payout ratio. Clear shareholder return signal.
One thing I noticed, they restructured subsidiary borrowings from 3 contracts totaling 11 billion into a single 4 billion facility maturing 2034. That's a meaningful deleveraging on that subsidiary's side.
Right. So while the parent is expanding debt for inventory, Star Mika Corporation, the subsidiary, is actually cleaning up and extending maturities. Different stories at different levels of the structure.
Also flag restricted stock compensation using monetary receivable claims as in-kind contributions. Pretty unusual mechanism.
It's a creative way to align executives without burning cash. But investors should watch the dilution from both the Tadamono issuance and this comp plan combined.
So the question for Star Mika is whether they can keep outperforming a deteriorating market. Watch those monthly secondary condo numbers.
And whether the Tadamono Alliance starts generating revenue before the inventory build becomes a problem. That's the tension to track next quarter.